today we look at the Money Game Plan 2026. It is a continual of our discussions on the investment and the financial way to invest your resources. And today I want to bring a very interesting topic, of course, the Money Game Plan 2026. And I want to introduce something which is very original, probably not found anywhere within any economics book, but of course relating with the underlying or with the current basic principles of investment. And a theorem called 20, 20, 20, 10, 10, 10. There is 20 here, so it's 20, 20, 10, 10. Theory of investment. And if you like it, you can call it Dr. Gikonyo theorem. It gives a room for researchers to be able to ascertain it and to be able to verify that. So for today, for the sake of the class, we just call it Dr. Gikonyo theorem. Of course, not found anywhere in the books of economics. And the reason why I was able to think about this, I was trying to refer to three people whom I've been following up. And the first one is Mheshimiwa Gikonyo, and he has been giving very interesting topics on how to invest. And every time he meets the practitioners, the professionals, you'll find him with accountants, you'll find him with the alumni of universities, you'll find him in universities also talking to students, politicians, and the business people. And he's giving very practical and a little bit of theoretical ways of to invest, and also advising things to do with the public government policy in terms of maybe investments. Then there is another gentleman, maybe lucky to mention him here. It's called Dr. Kariuki of Comfort Homes. He also gives more practical ways, and sometimes they would crash. But today I want to sit in between and say, going to school is very important. Reading is very important. However, reading is not necessarily going to school. You can run through apprenticeship and still master the basic principles. And we saw the guys in Kirinyaga Road, the so-called the Rwadia business gurus. They probably never went to any formal class, and if they did, it was at the basic level. But they were able to build their capacity through upskilling, retooling their skills in terms of entrepreneurship, and they were able to even put that into practice and be able to do better. Now, back to our interesting topic of 2020, 2020, 10, 10 rule. What does it really imply? And this is saying that we need to get to a room where we are going to investment way. And which are these areas you can be able to invest effectively in 2026 and change completely? I've already built up on how to build how to make money. I've also looked at how do you manage your resources. We have also looked at how do you manage the debt. But let us look more critically, how can you build more wealth? How can you continue leveraging on that wealth and invest? And in my daily engagement, I come across people who are asking me, where is it best for me to invest? And that's why I was able to come up with the 20-20-20, 20-10-10 rules, which really couples both the two views of the two players that whom I've just mentioned. And we see how can it work best for you. And these are the investment options. And the first one, I'll be able to talk that you don't put all your eggs in one basket. You need to separate your investments. And the first one, maybe the first 20, I'll still talk about the real estate. The four basic factors of production. There is land, there is capital, there is labor, there is entrepreneurship. We can't underestimate land as part of the factor of production. And in economics principles, the land encompasses the physical land where you can do a bit of cultivation. There is what you can be able to build houses and like investment. Then it also goes away and also explain about other natural resources. It could be water, it could be energy, which can harness maybe the electricity. You can talk about wind, the nuclear energy, and the like. All those you encompass them here. And what it means is that if you have your income to 100%, then allocate about 20% of this income on where to invest in real estate. And in real estate, you can go directly with what probably Mheshimiwa Dodo says that you don't need to do. You can buy the plot, and I'm not talking about the idle plot here. Mark you. You need to buy a more productive factor, a more productive brand, so that it can generate more resources and build some rental incomes. There is another thing you can also invest here. There are some things which are called REITs. Still in real estate, you buy some units, real estate investment trusts. You buy some units so that you can be able to invest in real estate. There is nowhere you'll ever go wrong that if you invest in real estate, especially in prime area, in the land which is generating more resources, yeah, and the land which can be able to help you to build more income as well. So 20% of your income or your investment, it should lie within the real estate. Then the other 20% of your investment, there is something I call about the government securities. And from time to time, you'll see the government frauding, what we call the treasury bills and bonds. The treasury bills, these are mainly short term, and they will give considerable amount of returns. And the treasury bonds, sometimes they stretch all the way to 15 years. And you can be able to allocate about 20% of your resources within the government securities. Then the other 20%, MMFs. And most people have really explained about, or other people have really geared towards the money market fund. All these, what you really need to do is to ensure that whatever investment you're taking is fully regulated by CME. Because there are some players who will be promising you about high yield funds. Some of the unit trusts you buy, some of the money market funds you inject your capital in, and you hear probably the kind of investment being taken offshore, sometimes not really appealing, and sometimes you would wonder what will happen eventually when the returns are not being able to be invested well. So that might bring a bit of challenge probably in future, but for now, look at the money market front, the players who are fully regulated by CMA, who don't have the issues, and they can be able to maybe you can be able to allocate 20% of your resources in terms of this investment. It's good to be very careful and to be able to learn what exactly can I be able to invest here from the 20% of the money market funds. And of course, the returns here are generally about 8 to 9%. Then, here Mheshimiwa will, I will agree with him when we talk about shares. 20% of your resources, of course for him, this is his first priority. And probably will not be agreeable to me in 2020, 2020 in 10-10 rule. Probably he'll talk about 80 and the rest put 20. But for me, I'll go for 20%. Here, what you need to do is to explore the company which are already listed in the Nairobi Stock Exchange and be able to look at their financials. Be able to look at their governance structure, be able to look at their product mix and how stable those companies are. We could have scenarios, exceptional scenarios like KQ, where we have the sheer really broader of issues. But there are more formidable companies within the Nairobi Stock Exchange in which you can invest your cash in and continue drawing the dividends. And if it's for short-term gains, maybe probably you can be able to sell at a premium these shares and be able to redeem your capital. Now, the next 10%, The other 10%, here I'm talking about, of course, the riskier investment that which you can focus in. And one of the riskier investments, which I'll also be able to agree slightly with the Mheshimiwa. In my daily interaction of my daily job, I found most of the companies not really doing quite pretty well. And what people are doing is that, or maybe even if they're doing pretty well, they are looking for how do they scale them up. And what they're looking for, that's the 10%. Is you look at investing in other companies. Either there could be companies which they are a little bit struggling because of lack of capital. And if you're able to inject your capital there, it can end up growing and inject fresh ideas. Two, there are others which are doing pretty well, but they want to scale up. Probably they have the operations here, and they want to look at maybe probably East Africa, or like even global markets. So you inject your capital here, about 10%, and be able to earn some resources because of sharing the profit. You come with the profit sharing matrix. And of course, this must be well guided so that maybe you consult your legal team to be able to bind these contracts well. Because most of the players, again, they just look for legal mechanisms to be able to play along with people when they get into these companies. Of course, there are a lot of issues when people try to get into these companies and they buy and they want to sweep the money from other players who have already invested there. So these ones need to be fully binding to ensure that your interests are fully taken into account when you invest into this kind of investments. The others who are looking for places like maybe venture capital. Venture capital is where they start up businesses. There is no harm because there are so many opportunities and this is the future. When I talked about the factors of production, then we need to look at the future and see what can be done here. Then the other 10%, here I'm talking about the bank's instruments. There's nothing wrong in having some liquidity in form of cash in bank accounts. And here you can go for savings accounts, which could stretch even to call accounts, which you can redeem your funds if needed. And you can drop off even the fixed deposit account. But here, you only put about 10% of your income. So these are the ways that maybe you can be able to invest your funds and be able to get more returns in them. But there are others which I'll be talking about probably later. Non-financial investments. Part of the factors of production is what we call entrepreneurship. You need to keep on honing your skills, be it in IT, be it in legal, be it in administration, be it in governance issues. You need to keep on building these skills from time to time. All these investments cost for you that you need to dig deeper and find out what works for me. Where can I be able to put my money better? How can my money start growing? So thank you. And as we cross over to 2026, try this theorem, which we call Dr. Gikonyo's theorem, and we see what will be the outcome. And I wish you a very prosperous, very fruitful 2026, and God being with us, we'll continue engaging more and interrogating the best way to do our investments. Thank you.